Good evening. I'm Epstein, and here you are with your SPDR-ETF stock market wrap-up. And this wrap-up is for Monday, the 8th of May, 2023. Well, the big event going to be tomorrow is when President Biden meets with the Democratic and Republican heads, two of each, from the House of Representatives and from the Senate. Can they get anything done on the debt ceiling? The president has to show he's forceful, blah, blah. This idea where the president says there's no negotiation, don't do that. You know that that's political jargon for let's negotiate. He has no choice, all right? Does he want to shut the economy down? Can you imagine what his presidency does if that happens? The Republicans would go, well, we wanted to make a deal. So the table has turned. He has to show there's a way to reach compromises, and that's why he is the president. That's my opinion. He has to, yes, fight for what he thinks is right and all that. But at the end of the day, this is a big event. You can't let that go down. Do I think they'll walk out of that meeting tomorrow with big negatives? I certainly hope not. The worst thing we could hear, and the market would react strongly, is no progress was made. They're as far apart as they ever were. You want to hear that the meeting went well. We differ on a lot of subjects. We're talking about it. We're doing a lot of talking. We realize the severity. Code words, let's find a compromise for maybe an extension. Not a solution just yet. I'm hoping it's that. We'll see if that's what comes in. So when I'm looking at TLT, this is on the front line of it, obviously. This is your 20-plus year Treasury bond ETF. You can see that the market has been coming down a bit here. You have the swing line, that's these brown lines. They attach to each of the prior bars as a daily bar chart with lower highs, lower lows. That's a downtrend until the market gets back over 106.60. That pattern's in place. The market, even prior to today, and I think you'd agree with me if we can take today off. This is Thursday's action. You were starting to get bearish. If you fell, I said, all right, first support, the combination of the 200-day in gray and the red, the 18-day average. Next support would be the 100. You went there today, and you tell me where you closed. 104.89, 104.82 is that number, all right? Now the question is, that was Friday. Now if you start down through this number, you got a new problem, and that's just what the market did. So now that problem could carry the market where? Well, you look to see where the Bollinger Bands are, and that's 102.97. Why? Because markets 95% of the time will stay within those bands, so if they reach right to it, up or down, I think, and this is what I teach, the smart quote-unquote money take some of their position or all of it off. There's different ways to judge what you should do. You have momentum down, trend down, bias down. I think the pros will be selling into rallies up here, stops over that number, and covering shorts 102.97. Schwab can't get out of its own way. I keep reading about people, folks, you don't realize what a great company this is, and it's so undervalued. And I read that. And by the way, I do think it's a great company. I think it's well managed. But they are caught in this banking issue. They are caught in the same thing that any firm is. If you got zero for commission, where does the money come from? So if you think they can afford to pay you 4.5% on your money and not make any money on commission, how do they operate? Something's not right here. And I think the smart people that have been in the business like I am, they understand it, all right? I've been around this a long time. I owned a stock firm. I understand the finances as to how they work. I understand how you make money on client balances. I understand how you got to retain client balances, how you make money in the old days when I was there without free commissions. Now you're getting paid for the trade. You know that. It's not that there's no commission. You're not paying the commission. There is a commission because they're selling that order book to Citadel and other firms, and they're making money on that order book. But is it enough to then offset what they're going to make if they pay a high interest rate? The answer is what the market is saying, not what I'm saying. No, they have a problem. In UGA, lower highs, lower lows. Now look what just happened here. You had what's called an embedded reading. This is when the K and the D lines, the red and the blue, the red is the K line, by the way, the blue is the D line, when they're going sideways under 20, and all of a sudden, the red closes over 20. That happened today. What does that often mean? It means the market's going to make a run towards the closest main moving average above it before it takes out that low. That's what typically I expect to happen. When we come to Tesla, here you had lost the embedded reading. Right here, same play. I'm looking for the 18-day average. It took time, it got there. So all this area here is telling me, no, you can't be short because of that lost reading. Got it? I mean, it's so simple. If you take the enhanced Bollinger Band course, you're going to go to yourself when you learn this and how to work with it. It's another neat tool. Right? Does every tool work every time? No tool that I know of works every time. But when you get these probabilities that are as strong as these are, and you decide what that probability number is, run your charts. You don't need me to tell you. Your eyes are going to bug out of your head when you see it. In XLF, higher high, lower low, you got to the Bollinger Band. What do we teach? Not embedded in the course. You hit the band, the smart money, quote unquote, whatever smart is, they take money off the table. Are you trending? You're really not. Higher highs and lower lows is not a trend. In the industrial sector, I like the short side of this market. I think the pros are selling this market right up here, stops over that number, and they're looking to see if you can get back to 97.65. There's a lot weighing on that sector. What if can you imagine if the debt ceiling issue doesn't get resolved? Can you imagine if the CPI number's super hot, the Fed's going to keep interest rates high and maybe go higher? That's not friendly for industry. In stocks, you've had a bear market rally. You had an embedded reading back here. You lost it. You got to the 18-day average. You fell back and you went to neutral on it. That's really all that happened. Next, we have XHB. And as you can see in this market, you've got higher lows, higher highs coming to the 18-day average. I had a monitor that went off, scared me, the way that it snapped right there. You can see what this market is also doing. It is fighting with itself right through there. And GLD. All right, in GLD, I think the pros are buying the 18-day average, looking to see if the market can get up to the Bollinger Band, but they don't want to get under the lows of Friday. If that happens, I would say you got to walk away from the market momentarily. What's the risk on the trade from buying that 18-day average there? Minimal. We'll see if that trade can work out. Silver market, no, not as strong as gold because it's overbought as can be. Copper market, all it's done is rally back into the resistance of the 18-day average. I don't think you can get excited with that. TLT, we just went through, as you can see. In fact, I didn't realize I had it there twice. Now, UUP, we got up, and this is the dollar, got all the way up here, now it's falling back. What's that market going to be? That becomes the interesting question. And it's the flip-flop of FXE, which I'm still friendly on, but I don't want to see it take out Friday's lows. As long as that doesn't occur, I stay in the bull camp. Take that out, I want to be sidelined right away. As you can see, those quotes weren't working. I apologize for that. But that's pretty much how I'm working with these charts, trying to see how this is all going to play out, what the market may offer us one way or the other. Now, there was an event that happened today. We saw the Federal Reserve Senior Loan Survey come out. It came out at 1 o'clock. And they're showing that the big banks, they are tightening up their standards, small, even more so. So the large and medium, they're cranking it up and they're going more so on the smaller ones. And then what's happening for the consumer, they're really tightening credit standards up. Try to get an installment loan. The survey says that the banks don't want to be involved in that right now. So you got to do that a different way, all right? So that's getting interesting. You put it all together, it's going to be an interesting 2 days. And I want to cover it for you. In the mornings, I put out both my morning futures, which you see, and my SPDR ETF video. I put out the futures and record it typically at 5:15 in the morning. It takes about 15 minutes to record, and then it renders and it's up on the site. At 9 o'clock, typically, I do the SPDR ETF. I want the first half hour of trade to go by. The difference is you have, as you know, in the stock market, you have aftermarket trade that doesn't tie in well with when the exchange is open. They've got to blend where things are going to be. It's the noise. The futures are open in many markets, 23 hours a day. They don't need that time frame. They close for an hour from 4 to 5 and they go. Yes, there are exceptions. You don't get, for example, the soft commodities, the cocoa, the sugar, the coffee doing those hours, the cattle or the grains, but you do get long hours out of them. So you want to pay attention to that. The thinner the markets, the more they don't trade 23 hours. The big boy markets trade in futures almost 24 hours a day. It's pretty fascinating as to how it works. So how do you join? Well, if you're on YouTube, you see the blue button at the bottom. It says join. Give it a click. You can also go to our website under the word research, or you can move your cursor up here, give it a click. It'll take you there as well. With that, I'm Ira Epstein. You have yourselves a great day. I will talk to you all first thing in the morning. Trade well.